Imagine you have spent an hours building a real estate financial model. Every formula is correct. Every assumption is carefully made. But when it's time to present it, it just looks like a spreadsheet. That's where the most people stop, and that's where professional begins. In this final episode of our real estate financial model series, I will show you how to transform your Excel model into a professional dashboard with dynamic charts, KPIs, and an investor ready presentation. By the end of this video, we will have a model that doesn't just calculate numbers, it just tells you the story. So hi guys, welcome to my channel. It's Nivesh Parshala. So open your Excel file and let's build the dashboard. So let's move to our dashboard. So this is our format of our dashboard. If you want this format, then the Excel file is attached in the comment section. Okay, so let's move. So first is our project overview. So in the project overview, the first is pre-construction start. So we already know equal to April 2022. Done. Wait a second. Done. Done. Then construction start equal to construction start April 23. Sale start equal to deal summary sale start December 23. Then construction end equal to deal summary construction end June 27. Total units sold equal to deal summary 57. Carpet area equal to deal summary 750. Net sellable area 290250. Construction GBA 302230. Sale price per square feet 9.5. Piece sold at start in summary units sold per month 5, and loan to cost 65%, and interest rate which is 9%. Done. First we will copy this cell and we want this format. So shift downside arrow, control alt V, and then press T for formats, and done. Okay, done. Okay, done. So our project overview completed. Then let's move to the construction cost structure. So here we will put all the cost, all the expenses. So first land. So we know the land. Then building cost, hard contingency which is 5%. Then KMC charges, then consultancy and warranty, then marketing, then overhead, then soft contingency, soft contingency. Done. After that, interest. Then last, closing commission. Done. So our total cost is equal to 204,202. Done. So the percentage of total land cost is total land cost divided by total cost. Therefore, 20.6%. Control R. So copy. Shift downside of Control Alt B F. Same formula we need. Control Alt V and F for formulas, and done. So we have found the cost structure, we have built the cost structure. Then we will move to revenue and profitability. Okay. So in the revenue and profitability section, the first is gross sale. So gross sale equal to deal summary, total gross sale. Then sale commission equal to is our sale commission. Then after that, closing commission. Then after that, warranty. Then total net proceed equal to all plus total cost equal to, you already wait a second, sum of the and the equal to is our total net profit. Done. Then we will move on to return summary. We already calculated the projected IRR, which is 33.1%. Done. Doing percentage. Okay. Done. Then we move on to return on equity, which is 133%. Next is return on sale, which is 26.39. Return on first, now after that, peak equity required, total equity required, or total equity contributed by the total partners, two partners, general partners and limited partner. And last is total profit. What is it? Done. So let's move on to the GP and LP equity structure. In LP and GP equity structure, the first is total percentage of equity contributed by the general partner, which is around 10%. Wait a second. Yeah, 100 by 10%, followed by the LP, which is 90% remaining equity contributed by 90%. Done. Then in tier 1, in tier 1, general partner is 10%. Equal to 10%. And after that, in tier 2, 20%. In tier 3, LP is 30%, and GP is 30% and LP is 70%. Total 100%. Done. So this is our equity structure, total equity structure. After that, we will move on to development sensitivity. We know that already we have found out in deal summary. This is our total development sensitivity. Control plus R. Copy. Sorry, 1 second. Control Alt V. Press F formula and done. So this is our development sensitivity. Just we copy it. So yeah, last thing is left. The projected IR we already find out. Total projected IR is 33.1%. Return on equity equal to 133%. After that, total profit. Is the total profit, total gross sale, done. Now it's left total equity contributed by the both partners. Done. Is it done? And return on sale. And done. So this is our overall dashboard, and this is our the front page in the dashboard, where project IR is there, return on equity is there, total profit is there, gross sale, peak equity, and return on sale. Everything is there. Change the color little bit. Return on equity, black. Yeah, done. So let's move on to our chart section, where we will make different types of charts, like histogram, pie chart, each and everything. So let's move on to the charts. So we have already made a visual analytics of margin sky, guys. You can see there is a total 4 different charts. I will tell you what is this. First is total development cost breakdown, then return summary, then cumulative equity balance, equity contributed by the total partners in different time period, and then is revenue versus cost versus profit. Okay, so just it's very easy. Just you have to put the value. There is, suppose there is a total cost breakdown over here. It is the full total development cost. Then we move on to gross sales, total cost and profit. Then move on to KPI, IR, return on equity, return on sale, return on cost. Then the equity contributed by the both partners in different time period. You can see there is total 41 periods. So there is a different time periods, and then is the same thing of these are the same thing. So it's very easy. You have to just select the data. You have to select the data and insert and choose the chart, recommended chart. There will be here many things. You can select any of them and just change the format axis, and this you will easily find out. Okay, so you can see in the cumulative equity balance, there is the first is a negative balance for the 31 period. Then afterwards there is a positive value. And if we move on to revenue versus cost versus profit, you can see the gross sale is much higher than after the total cost, and the profit is this. And then in return on summary, you can see that the IRR is very good, but return on ROE is much higher than everything. It's almost 133%. So this is our total visual analytics, and this is the whole series of our real estate financial model. I hope you have liked the previous videos, and watch it. If you don't, please go through it, and this is for that. So let's end this series over here. we will move on to the next series. After that, we will discuss little bit. So if you like this video, please like and subscribe. So signing off. Goodbye.